Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 2nd of May. Starting off with the FTSE 100, where it's a rather interesting pattern we've got here. You could argue that February to May is actually an inverted head and shoulders, with the depth of the low there from 7,200 to the neckline 800 points, which I suppose in normal charting calculations would mean if we break the neckline there around 79.20, we would have another 800-point rally, but obviously that might be a bit too much for people to digest at this point. Instead, let's just go for a break of 79.30 on an end-of-day close basis. Could take us up to retesting February intraday resistance at 80.47. Above that, we're looking at 8,300 or so, which is the top of that rising September trend channel. But again, that might be too much for people to cope with. On the downside, support at the 50-day line, 77.60 or so. Obviously, we bounced on Friday above that, which was a bullish sign. RSI well above the neutral 50 level as well, 58 right in the box seat in terms of continuation on the upside. So in other words, we're just getting started on that basis. Moving on to the DAX, which has been leading the FTSE really. The resistance in February, March at 15,700, support for April, May 15,700, so that is a plus point. Clearance of 15,900 could take us up to as high as 16,500 by the end of this month. That's the top of the rising September trend channel. On the downside, we're not looking for anything worse than the combination of the 50-day moving average and the floor of the channel there around 15,400, barring any other banking collapses, which apparently are not a bad thing these days anyway, so that's all good. Moving on to the Dow, and here the market managed to achieve something that we were thinking that it might never be achieved, i.e. to break that resistance line there from last April. It's a bit of jiggery-pokery either side of it now, but still pretty good result there, especially given the way that the Dow managed to bounce above the 50-day line, a bit like the FTSE. We've also got that theoretical inverted head and shoulders pattern there, which would then give us a potential move around 2,500 points up towards the top of that rising trend channel from August last year, 36,000 plus. But let's just try and get through that line and maybe through the 34 to 35,000 area, which has been resistance over the past year. At the moment, the worst we're looking at is hopefully just a test of the 50-day line near 33,000. On to Bitcoin, where we're waiting for it to be on the right side of 30,000. So far that hasn't happened. Instead, we're toying with the 50-day moving average. Not a great look at the moment, in the sense that it looks as though we're finding resistance now at the 50-day line, which is around 28,200. Below that, we're looking at a test of the 27,000 area, basically post-March support. And then below that, 25,000, but which was the old February resistance. But at the moment, not looking for really much below 27,000, if one has to be honest, even if we don't manage to stay above the 50-day line. RSI is now below 50. That does warn us that 27,000 or even sub that level could be on its way. On the upside, an end-of-day close above recent resistance around 29,500, or 30,000 actually intraday, would be the trigger for a move towards that June broadening triangle at 34,000, which obviously at the moment seems rather a long way away, but that could still be done by the end of this month if we clear 30,000 quickly over the next week or so. Moving on to the stocks, and starting off with our exploration, which had one of the what I thought was one of the better RNSs, apart from maybe Marula last week that we've seen in the recent past. Here the shares have pushed up, but with a gap, but not very high so far. Looking for them to break that 19 pence area and ideally break that level and go on to the top of the rising trend channel from back in May last year as high as 23 pence. And if everything goes quickly, which it might do, if the gap remains unfilled, then we could see 23 pence by the end of this month. On the downside, really don't want to see an end-of-day close back below 16 pence and the floor of that rising trend channel from the spring last year. Onto the stock, which I haven't covered here before, but looks like it might have some glory to deliver to the bulls. Here, Celsius Resources has broken back above its 50 and 200-day moving average. It's also broken that falling wedge from the end of January. That suggests that while we're above 0.8 pence, we could head up as high as 1.2 pence at the top of that broadening triangle from the beginning of the year. And we could see 1.2, maybe even as soon as the end of this month. So watch out for that. We might have the move that people have been waiting for there. On to Destiny, and here you can see that the shares are just starting to do what we want them to do, i.e. break above the 50-day moving average on an end-of-day close basis. There's been some weird machinations either side of that blue line there. I suppose the easiest thing to do there, or here in this situation, is to wait for an end-of-day close, 36 pence plus, and then we could be on our way not only to the 200-day moving average near 40 pence, but maybe a 2 to 3 month target as high as 65 pence. But everything here really depending on closing above the recent resistance for the shares, post-March resistance at 36 pence, which I think could still be possible. Sub 30 obviously delays that rather bullish scenario. On to Ensilica. And here you can see that we've got a line of resistance there from January. We want to break that around the 73 pence level. If we can do that, then we could be back towards £1 over the following 4 to 6 weeks. Nice little kink in the RSI window there around the 50 level, which does suggest that we could be moving higher, as does the rising 200-day line and the unfilled bear trap gap reversal that we've had. Bear trap from below the 66 pence low of March. So basically looking for the shares to stay above 66, break 73, and then head up to £1 over the near term. Onto a stock which had lots of fans a while back, and maybe it'll have some more fans now. We've got Falcon Oil and Gas with a rising 50-day moving average, rising 200-day moving average, broken the 50-day line with a quite a jump, and above 9 pence we were looking for not only 10.5, but then up to 14 perhaps as soon as the end of this month. And end of day closes above 10 pence should do the trick for that particular situation. We also have bullish divergence here in the RSI window, so the lower low for the early part of April, but a higher RSI trace. So that should take the shares on their way towards 14 pence, which is where they were basically back in the autumn of 2021. Moving on to a stock which is relatively obscure, but may become less obscure. Here we've got Genincode, which has delivered a bear trap rebound from below the 200-day moving average, the grey line there around 16 pence. It also looks as though that October to January price action was a bear trap, and that we're really in a range between 14 and 30 pence. Hopefully thought 30 pence could be hit by the end of next month if we have a swift break above the 50-day line, currently at 19 pence. Next situation is one of the better RNSs of the day, probably in this case, a very good one indeed, given the way that we've had a unfilled gap to the upside through the 50-day moving average. Resistance there on Longboat around the 25 pence area. If we can get through 25 pence, the target there could be up to 40 pence, but obviously that's the technical view, not the fundamental one. And ideally, we stay above recent resistance around 15 pence ahead of 25 and then 40. Bullish divergence actually flagged the move higher, but presumably during March and April, after the rather horrible ride that shareholders had, maybe most did not take heed of those signals there in that stock. But above 14, looking for 25 and 40 on Longboat. Moving on to one of the better announcements of last month, Ondo, where we got a V-shaped bull flag here. Found support just around old resistance there from last year, around 9.5 pence, almost exactly at 9.5 pence, and we've rallied since there above 11 pence, and we're now looking for the target mentioned before, as high as 19 or 20 pence, hopefully by the end of next month, and perhaps even much more than that, because this does look like a very good setup indeed with that V-shaped bull flag and the rising 50 and 200-day moving averages. Oriole is next, and here you can see that the shares have curled up quite nicely after their recent break of April resistance around 0.21 pence. Above that, we're looking for quite a decent target, actually, the top of a broadening triangle from July last year. That's heading as high as 0.4 pence, and we might actually see that by the end of this month while we hold above 0.21. The other kicker here is that we're in the run-up to a golden cross, so the 50 and 200-day moving averages both rising, and the next time they touch will be a golden cross almost inevitably there. One of the announcements that we got through today was quite a clever one from Powerhouse Energy. Here you can see the shares are up around 11%, just bouncing off that support line there from back in December. Uptrend line in the RSI window, which has been in place for months, so hopefully that will finally kick in and give us a move towards 1.25 pence at the top of that falling wedge that we've had since September last year. Best case scenario would be a move up to the 200-day line at 1.35 by the end of next month. Finishing off with URA Holdings, which I interviewed last week, and here the shares have performed well with another push to the upside, bouncing off the floor of that rising trend channel which has been in place basically since the shares came to market. Top of that channel heading for 4 pence, and especially while we're above the floor of that channel there around 1.6 pence, looking for 4 pence ideally by the end of next month, and hopefully there's now no price action even back below the 50-day line at 1.95 pence. That's it for me today. More updates tomorrow.